Hello and welcome to this very special conversation with billionaire banker and founder of Kotak Mahindra Bank, Mr. Uday Kotak. Thank you, Mr. Kotak, for joining us on Live Mint.
Thank you, Gopika. Great to be here.
Well, you put out a New Year message on X platform, and you listed out various measures that you would like to see. One is growth. What kind of measures do you expect to see those animal spirits get boosted again?
I think we've come to a point where the private investment has been sluggish and the economy is disproportionately dependent on public investment. Time has come for private investment to really now get going. One of the issues in the last few years was capacity utilization. But as capacity utilization gets better, I would strongly encourage all my private sector enterprise friends to start putting money to work. This is a great time to be now investing as we look at the future.
We have the budget coming up in a month's time. What are your expectations from budget this time? It's the first full year budget from the NDA 3 government.
I think it will be bold. It will be futuristic. And I'm confident that we will be on the path towards a 30 plus trillion economy over the next 20 to 23 years.
We've seen that private capex has been quite slow in picking up after the de-leveraging we've seen. When do you see this picking up, and is it a concern?
I think on private capex, the question is, what is it that is holding back Indian entrepreneurs? One of the challenges in the last few months has been slowdown on the consumption story across the board. And in addition to rural consumption, I think we have to watch urban consumption, which in many sectors has also been a bit sluggish. And I think one of the reasons, I believe, has been the currency. Indian currency has been remarkably strong compared to other emerging markets over the last 12 to 15 months. And that strength of the currency may have also played a part in little bit of sluggishness on growth.
So everybody is anticipating some sort of uncertainty with the change in the US government. Our trade deficit has also widened, rupees under pressure. How do you see the trade and the financial landscape sort of panning out this year?
So I think first, India is in a good position. Our current account deficit, even now, is 1.2 to 1.3% of GDP. And you know the orange line is beyond 2% and the red line is beyond 3%. So India is very far away from that. However, we now have a very strong US economy. And the US 10-year bond yields are actually firmer than what they were in August at close to 4.6%. Therefore, with such a strong US economy and higher interest rates in the US, it does impact global flows. For one of the challenges for India is to be aware of the fact that our FPI portfolio at market is 900 billion. In addition to that, we have the FDI portfolio, and we have seen some strategic investors, including the likes of Hyundai, actually take some money off the table with good valuations in India. And then, of course, we have the ECB. Therefore, while our reserves seem to be around net basis post the forwards at around 575 to 600 billion, we have very significant obligations on the FPI, FDI, and ECBs. Therefore, while we are in a very comfortable position, we should be very alert, especially as the US goes through its change.
Well, the markets have been on a rise. Do you see some sort of froth building up in the market? What are you telling your investors?
I think we have to go back to fundamentals on valuation. I do believe that the small and mid caps may have some froth. The large caps still are relatively better priced, but I would like to say that P ratios need some moderation, and a lot of new money is coming in from areas and people who are first-time investors post-COVID. They have not seen a downturn.
We also have, with reference to the private capex picking up, do you see interest rate reduction as a sort of solution to boost investments?
See, interest rates, again, there is two parts. One is the short term and second is the long term. As you saw in the US, despite short term rates being dropped, the long term rates firmed up. Therefore, India runs a similar risk. Therefore, we cannot afford our short term rates to be so low that it puts pressure on the currency. Therefore, short term rates have to keep in mind the currency moves, and the long bond rates, in my view, are not likely to go down too much.
You've also spoken about regulation, too much regulation and avoiding zero accidents. What is the message that you have?
So, first of all, on regulations, I'm talking about all sectors. I'm not talking about any specific sector. And across the board, I do believe what the Prime Minister said, that we must focus on ease of doing business and ease of living. And as long as we keep these principles in mind for business, I think we can get to a much better balance on regulation.
And finally, you had spoken about a financial sector model, the 9% annual growth rate, and the $30 trillion GDP by 2047. What steps, medium, short term, medium term, long term measures need to be taken to achieve that?
I think one of the big developments which I have seen in my life is the saver moving to becoming an investor. So I think that's a very big plus, because that means India has domestic risk capital, which is ready to take risks on investments. So that is a very big plus. Second, I think we have, this was in December 2023 when I talked about the difference in taxation between capital gains and interest rates on deposits and bonds. Since then, in the budget of July 24, the capital gains tax has been simplified and rationalized upwards. I would like to see going forward taxation on interest rates and individual income coming to more moderate levels. We should increase the slabs of lower tax in any case for individuals, but also maximum tax rate moving more to about a 33% odd. Therefore, my ideal situation would be a corporate tax, which is a quarter, and an individual tax at the highest marginal rate, which is a third.
On that note, thank you so much, Mr. Kotak, for joining us.
Thank you very much, and good to be with you.
Thank
you.
Well, that's a wrap on the exclusive conversation with Mr. Uday Kotak. For more news and updates, log on to livemin.com.